Good morning, Brew Daily Show. I'm Neal Freyman.
And I'm Toby Howell.
Today, the U.S. and China have begun divorce proceedings, and it's getting really gnarly.
Then inflation actually eased up last month, but there's a major speed bump, tariffs still looming. It's Friday, April 11th. Let's ride.
Fans of Twilight, I have some cool news for you. This week, a national tour of the first ever Twilight in concert was announced, where the film will be shown alongside live musicians on stage who will perform the film score synchronized to the original movie. If that's not romantic enough, there will be 1,000 candles twinkling on the stage. The tour will hit 60 cities and ticket sales begin today. Toby, I know you are a huge Twilight guy. This feels like your Eras tour.
It is my Eras tour, and I'm not too proud to admit that I did put in some time to try and learn Bella's Lullaby on the piano growing up. It ended up being a little above my pay grade, but also this announcement got me thinking about other movies I'd like to go on tour for their soundtracks. Obviously, anything my boy Hans Zimmer touches is a must, but I'm glad the GOAT already basically has a worldwide concert tour going. Lord of the Rings solid, Harry Potter solid. I think it's just any character where the movie where the soundtrack feels like a character in the movie. So, I mean, Star Wars is another good one. I'm just going through the basics right now. I don't have any very niche movie soundtracks that, you know, are worth listening to, but do you have any that you would love to see on tour? Or
No, but at Tanglewood in Western Massachusetts, near where I grew up, John Williams, who did Star Wars, E.T., Jurassic Park, does every single year, he does a concert of his movie soundtracks, and they play it on the screen, not the entire movie, but that was just like a core memory from childhood where we would go watch John Williams. It's just kind of a fantastic experience.
Now a word from our sponsor, TaxAct. Neal, do you remember that feeling in school when you'd realize a huge paper was due tomorrow?
Oh, for sure. There would be a full body panic, an IV line filled with coffee, and a small voice in your head telling you to change your name and flee the country.
Well, that's exactly how I feel about taxes right now.
Then it's time to pull yourself together and log on to TaxAct. It's a cheat sheet for grown-up responsibilities. They walk you through the whole process step by step.
But I always second guess myself, like, did I report that thing from last year? What even is a 1099-K?
That's why they've got Expert Assist. Real tax pros ready to jump in when you need backup. Think of them as the smart kid in class who is also really cool and handsome.
Got it, just like looking in the mirror.
All right, get over yourself and get over your aversion to taxes by heading to TaxAct and getting it done accurately, confidently, and without the stress.
Head to taxact.com and file before April 15th.
4 days away. Well, it was fun while it lasted. After Wednesday's history-making market rally sparked by Trump's reversal on tariffs, stocks resumed tanking on Thursday. The S&P 500 lost 3.5%, the Nasdaq fell even more, 4.3%, and the Dow dropped over 1,000 points. Some big tech names took a bruising. Tesla lost 7%, Meta lost nearly 7%, and Nvidia dropped 6%. Plus, the dollar had its worst day since 2022, and those closely watched long-dated bond yields continued their worrying rise. And that's because after the euphoria of the 90-day delay for most countries wore off, investors realized we still have a monumental trade war on our hands between the world's two largest economies, the United States and China, who are locked in rapidly escalating economic warfare that will have ginormous ripple effects across the globe. President Trump said yesterday that he had raised tariffs on Chinese goods to 145% since taking office, which he blamed on China's unfair trade practices and its retaliation for his initial tariffs. China has retaliated in a big way, nearly matching the U.S. with 125% tariffs on American goods bound for its shores. Neither side is backing down. The rhetoric has only escalated, and millions of consumers and businesses will likely confront higher prices and lower growth. Toby, with your permission, I'm going to go ahead and use the U word here, unprecedented. We are watching a nasty divorce unfold between the world's two major powers whose deep trading relationship has defined the global economy in the 21st century. In this high-stakes poker match, both have plenty of cards to play, and if one thing is clear, neither is planning on folding.
You do not have my permission, by the way, so bring back that precedent, please. You are right. This affects pretty much everything. I'm just going to go down the list of all the industries, all the bargaining chips that these two countries have on the table. First up is Hollywood. Actually, China is letting fewer U.S. films into their market. Hollywood's share of the Chinese market has dropped from 9% to 5%. So that is one thing. One of our big exports from America is entertainment. So China is saying that we're not going to let as many films into our domestic box office. Obviously, Apple is just getting wrecked by this whole thing. We've talked about how these tariffs could tack on $350 to the price of the next iPhone. The bike industry and the e-bike industry is super exposed as well. Tariffs could spike prices on those input costs up to 50% because a lot of bike parts are made over in China. And then clothes is a pretty obvious one. Tariffs of over 60% on clothes from China means that back to school spending and just your Zara hauls are going to get more expensive. Car prices is another one. I mean, I could literally keep going down the list, but the reason why these two countries divorcing, as you put it, is so big is just how many specific industries are going to have to reckon with a new price calculus to deal with.
Yeah, so let's go over the top line numbers. The U.S. last year imported $438 billion worth of goods from China. We exported $144 billion to China. It's that big trade deficit of more than $200 billion. It's been this way since 2005. That's really irked a lot of U.S. administrations, not just Trump. Biden has also placed tariffs on China, but we haven't seen anything like this. 145% U.S. on China, 125% on China back to the U.S. That essentially freezes trade. You are not going to be competitive in the marketplace, or you have to more than double your price to compete with competitors. And we're already seeing this freezing in action. Yesterday, it was reported by Bloomberg that Five Below asked its vendors to just stop sending stuff from China, just saying, don't even let it leave the port because we are not going to pay 145% on it. You might, Five Below is a discount retailer, probably a large majority of what you go and see in their stores is made in China. The ripple effects are going to be huge across so many different industries.
And some reporters went over to China and started talking to vendors over there. One specific industry that is massively impacted by this is actually the plastic Christmas tree industry and the Christmas ornament industry, because 85% of Christmas decorations that come into the U.S. do come in from China. And it was actually relatively sad to listen to these reporters speaking to these factory owners saying, we have 0 orders coming in. No one has ordered anything. So it's not trickling to a stop. It is basically fully stopping right now because 100+ tariffs are basically trade embargoes. There's no one who can, no one's business can really survive margins that just get absolutely gobbled up by these trade barriers. So I think you are seeing basically a trade freeze, at least for now. Obviously things change. We've talked about bargaining chips, this and that. So there is maybe some thawing that will be to come, but right now it is just totally frozen the relationship between these two countries.
And we know that tariffs from the U.S. on China will likely raise prices for consumers across electronics, bikes, artificial Christmas trees, etc. But what about trade from the U.S. to China, right? It's not as, in terms of goods, it's not as big as what we import from China, but we did export $143 billion worth of goods, and those are American jobs here in the United States. More than 930,000 jobs were supported by U.S. exports to China in 2022. That's from the U.S.-China Business Council. They are our 3rd largest export market, so they do buy a ton of stuff from us. Those top exports are mostly soybeans, other agricultural products, aircraft parts, and planes, and also crude petroleum. So those are the industries to watch that could be affected from those retaliatory tariffs back on the United States.
Inflation figures are in, and they're looking like the migration patterns of Arctic terns heading south before the summer. Consumer prices eased downward month over month for the first time in nearly 5 years. The CPI fell 0.1% in March. Woo! Year-over-year inflation also dropped to 2.4%, below the 2.6% economists were expecting. If you're looking for the MVP of falling prices, look no further than your local Chevron station. Gas prices dropped steeply last month due to supply cuts from OPEC and pulled the whole index down with them. But even the so-called core inflation measure economists watch that excludes volatile energy prices came in below forecasts and notched its smallest increase since March 2021. But also, like the migration patterns of the Arctic terns, prices likely aren't going to stay south for long. Economists warn that new tariffs could juice inflation in coming months, even with the pause Trump announced late on Wednesday. Based on how stocks traded yesterday, with all three major indexes finishing deep in the red, it's a sign investors are still nervy when it comes to how tariffs might weigh on inflation progress. So, Neal, a good report, but maybe a little backwards looking.
I will never get bored of you getting hype about inflation. But you're right. I mean, if only investors were as hype as you, I think absent of tariffs, if we saw this report come through, stocks would be through the roof. But as I mentioned, they were in the dumps yesterday, and that's because this tariff threat, this huge trade war between the U.S. and China is just overshadowing everything else. And it does directly tie into this inflation report, too, because we saw, cooling inflation for the first time in 5 years from this report. But it looks like going forward over the next few months, those price hikes from the trade war with China will be filtering through the economy. And, you have pretty much every economist saying that this is the calm before the inflation storm. We're going to get higher inflation out of these tariffs, and prices will go back up. So this is essentially a baseline from which we can measure how much tariffs do impact inflation.
But still, that 0.1% drop that I celebrated came from somewhere, and I mentioned gas prices, but a lot of the downward price pressure looked like it came from travel-related things. Gas had a 6.3% month-over-month drop. There was a 5.3% decline in airline fares. Hotel prices also fell sharply last month. So the vibes that I were getting from this report is that a lot of people are choosing to do staycations, maybe postponing that travel because of the uncertainty on the horizon. So one final thing that we should add to this whole inflation cocktail is that government data continues to come in very solid. Employers added 228,000 jobs a month. We just saw inflation tick downward. So if you are right, if absent of this trade war, everything looks like it's heading in the correct direction. But obviously, there's just that massive question mark, that massive uncertainty that this trade war does introduce into everything.
And I can't believe we've talked for 5 minutes about inflation without mentioning egg prices. So we got to go there. They rose to a fresh record, up 5.6% in March from February. And that's despite wholesale prices plunging, actually. They went from $8 a dozen in February to $3 a dozen in March. But that just hasn't shown up in the retail aisle yet. These supermarkets, these grocery stores are just very wary of changing the sticker out and putting a lower sticker in because there's just been so much whiplash. They've been behind the 8 ball for so long. So yes, wholesale egg prices coming way down. Retail prices, not so much. There was a big merger yesterday among Italian fashion brands you can't afford to buy. Prada announced it was buying Versace for $1.4 billion in the biggest luxury deal of the year. It's an agreement cloaked with symbolism because it shows that Prada is dead set on building a made-in-Italy luxury house that can compete with the French giants like LVMH and Kering. In fact, that's exactly what the current owner of Versace, Capri, was trying to do, but in America. The New York-based company bought Versace in 2018 for $2.1 billion in an attempt to create a global luxury fashion group alongside brands Michael Kors and Jimmy Choo. That purchase did not work out as intended. When touting the Versace deal back in 2018, Capri CEO John Idol said his goal was to double the brand's revenue. It's actually gone negative from $843 million in sales in fiscal year 2020 to $813 million last year. So he dumped it for a $700 million loss, and those dreams of rivaling LVMH have been significantly deferred. Could Prada have a better shot? Potentially, because it's kind of on a hot streak right now. The group grew revenue 17% last year, even as the luxury sector overall has hit a downturn. Toby, is it Italy's time to finally challenge France's luxury dominance?
I mean, if anyone could do it, it is Prada, because Prada has just cracked the code in recent times. Most of their success, and it has been a very good success because they're going in one direction while the rest of the luxury market looks to be going in the other direction. And you can attribute it to some of its sub-brands like Miu Miu is just massive right now. Retail sales of that brand grew 93% last year, so that is clearly bucking this overall trend of luxury spending slowing down. That being said, though, Prada Prada has tried to do this before. Back in the right around the turn of the century, they were trying to become an Italian fashion house. They bought brands Jill Sanders, Helmut Lang, that they thought they could share their approach to it and just bring kind of their winning alchemy to it. That did not work whatsoever. They sold Lang in 2005. They divested from Sander the following year. So this is not necessarily an easy thing to do. You can't just say, oh, like, let's just apply the same approach to the Prada brand and the Miu Miu brand to these other brands like Versace. So good luck, Prada. If anyone can do it, it's you, but you haven't done it very well in the past.
There might be a surge of, fashion or luxury nationalism in Italy right now after this deal because Italy accounts for 50% to 55% of global personal luxury goods production. They have all of these such iconic brands. But what happens to these brands like Versace is they get gobbled up by US, France, Switzerland, these huge luxury companies, and they don't stay in Italy. So Italy does such a good job of having these like big family-owned massive brands, but then they just go elsewhere to be scooped up by LVMH. And now Prada is saying, come back to Milan. We want you back to Milan. I mean, these two companies, Prada and Versace, are literally 4 kilometers apart in Milan. So maybe this homecoming from Italy will be good for Versace because Capri did not do a good job with it. This John Idol absolutely tanked this brand. So, I'll be watching, and I won't be wearing.
You won't be wearing, but
I won't
you
be
will
wearing.
be watching.
I will be watching, but I am interested in this Miu Miu brand because that seems to be exploding.
It's the new thing. All right, let's take a quick break. Stock of the week, dog of the week is up next. Welcome to Stock of the Week, Dog of the Week, where Neal and I take you through one stock that's the equivalent of Rory McIlroy's front 9 on Thursday, and one stock that is the equivalent of his back 9. Neal, you won the pre-show game of who can name the most types of salad dressings. Great poll with chimichurri vinaigrette. So you're up first. And since this has been a rocky week in the market, to say the least, let's start with our dog of the week.
My dog of the week is Pharma stocks. Eli Lilly, Novartis, Merck, AstraZeneca, basically any company you associate with waiting in line at CVS took a beating this week after President Trump pledged to slap heavy tariffs on imported drugs very shortly. The pharma industry has been a bit of an outsider watching this tariff chaos unfold. Pharmaceutical products were not included in the list of goods that would have been hit with those massive reciprocal tariffs that were later pulled back, which means their stocks weren't crushed alongside everyone else, but they also didn't rally on Wednesday like everyone else. Still, Judgment Day could be coming soon. This week, Trump vowed tariffs at a, quote, level that you haven't really seen before in order to compel companies to bring drug manufacturing back to the U.S., where it has been dwindling. That could do major damage to companies like Eli Lilly, who depend on foreign production for the active ingredients in their blockbuster drugs. The pharmaceutical supply chain is a hyper-complex, interconnected web that crisscrosses the globe, one that cannot be easily untangled, and companies are warning that it won't be so easy to simply flip a switch and start making medicines entirely in the U.S., so they warn of higher drug prices for Americans and a hit to R&D budgets should these tariffs go into effect.
I mean, this definitely was a roller coaster week for pharma stocks, Neal. First, there was the down. Trump said at a dinner that he would soon levy major tariffs on drug imports. But then there was this brief moment of celebration on Wednesday when the 90-day pause announcement came in. That was quickly dashed, though, because that celebration basically had to be cut short. Scott Bessent clarified that the pause on tariffs only applied to country-specific reciprocal tariffs, while then White House Press Secretary Caroline Leavitt confirmed that the administration is still planning to announce pharmaceutical tariffs in the near term. And then a lot of analysts said specifically that they're anticipating high tariffs on, quote, pharma tax haven countries like Ireland, where these companies set up headquarters in order to try to, evade some taxes coming out of the United States. So those haven countries are not going to be spared, and analysts are saying that they're possibly expecting higher than the April 2nd figures to be applied to these, niche, not niche industry, but this industry of pharma. My stock of the week is fake proposals because there's a new ring pop factory popping up in Moosic, Pennsylvania. Ring Pop is owned by Bazooka Brands, which is owned by a private equity firm, which helped fund the new factory that replaces the OG Ring Pop factory in nearby Scranton. Why the second factory? Well, mainly because the old factory in Scranton was unexpectedly shuttered last year after the literal floor shifted due to there being a lot of mine shafts located beneath the building's foundation. But also, an upgrade was probably in order. Bazooka, which also makes baby bottle pops and Bazooka gum, is forecasting $100 million in sales this year. And the new factory is roughly 4 times larger than the old one, capable of producing 1.5 million candies per day. Neal, lots of people suck, but it seems like they're sucking on ring pops.
Ring pop is blowing up. I mean, year over year sales are up 7% at the end of last year. It's grown consistently over the last decade. This is the most important brand in the entire Bazooka Brands portfolio. It is the closest thing. This factory is the closest thing we have to Willy Wonka in real life. They're leaning into this concept of edible entertainment where there's play value, there's viral value. We know that younger kids are moving away from chocolate and more into sour gummies and chewable candies. So Ring Pop, it's been around for 48 years. It may never be as popular as it is right now.
We are definitely seeing candy makers who make kind of traditional or old school candy having their moment right now. I mean, Blow Pop owner just expanded their factory in Tennessee. They invested $100 million in that. So you're seeing these classic candy makers kind of saying, why are we so popular right now? There is like this kind of backwards looking vibe to it. But you are right. There is edible entertainment. Sounds like a funny thing, but the Bazooka CEO says we're not just a hand-to-mouth candy. There's stuff that happens in betwixt that moment of just putting it in your mouth, like sliding it on your ring, you know, pretending that you're getting engaged. That whole aspect to it is something that a lot of people are still resonating with to this day. This also reminds me of, we talked about this, I think it was last year at this point, the viral TikTok candy of mango peelable candies, which is you took the skin off and you ate the skin and also the fleshy inside of the mango. Those went viral, and it's a similar thing. It's like an active approach to eating candy. You're not just popping them in your mouth. You're doing something else along the way before the sugar rush hits you. Now let's sprint to the finish with our final headlines. And a move straight out of Seinfeld. President Trump signed an executive order to give showerheads, yes, showerheads, a serious boost in water pressure. I like to take a nice shower to take care of my beautiful hair, President Trump said earlier this week in the Oval Office, and went on to rail against the current state of showers. I stand under the shower for 15 minutes until it gets wet. It comes out drip, drip, drip. It's ridiculous. Trump's crusade against weak showerheads has been a long-standing battle that dates back to an Obama-era definition of a showerhead. In his first term, Trump increased the amount of water that showers with multiple nozzles could utilize. Biden later reversed that change, but now Trump has played another Uno reverse card. Neal, if you can't boost tariff rates any further, you might as well boost water pressure.
I mean, I am a single-issue voter, I'm not going to lie, and my one issue that I vote on is shower pressure. It's that important. But yes, this does seem to have a lot wrapped up in just the basic definition of what a shower head is. Previously, it had been defined in regulations as any plumbing fitting designed to direct water onto a bather. Trump administration came in and then changed that, defined it as an accessory to a supply fitting for spraying water into a bather. You got the difference there? And then Biden changed that, and then Trump changed it back. So we have this different definitions of water pressure, but honestly, at the end of the day, it probably doesn't make any difference. Appliances Standard Awareness Project says that if your water pressure is weak, it's just because of your home plumbing or there's been limescale buildup in the shower head.
And also, thank you for showing me the Seinfeld episode about water pressure.
Low flow.
Yeah, low flow. You cannot deal with low flow.
A number of movies have been spun off from Saturday Night Live. Now, Saturday Night Live is getting its own spin-off in England. A British version of NBC's 50-year-old late-night juggernaut is coming to London, and it'll look a lot like the SNL of the USA, just 5 hours in the future. Lorne Michaels will be the executive producer, and the show will feature a British cast of comedians performing sketches, as well as rotating hosts and musical guests. It will premiere next year on Sky, the broadcaster owned by Comcast, which is also the parent of NBC. Toby, what do you think? Live from Piccadilly Circus, it's Saturday night?
I just think it's a good idea and one that Lorne Michaels and SNL has been trying for decades now. SNL has actually franchised itself numerous times. The longest running global adaptation of SNL is actually in South Korea. It's been going on for 15 seasons. Germany has an SNL offshoot that's been going for 5 seasons. Egypt and Italy have one that's been running for 4 seasons. Maybe the funniest attempt, though, came from France, where it only lasted a single episode aired, and guess what they called it? Les Saturday Night Live, which sounds sounds like exactly what the real SNL would call it if they had a French parody version SNL pop up. So clearly this is something that has been on Lauren's mind. He's like, why don't we just take this approach and apply it to other countries? But I just wonder if the different comedy cultures are going to accept, a sketch comedy show like America has. So I am curious, though. I do want to see it in because the British version of The Office is maybe funnier than the American version, so they've got their comedy chops for sure.
Let's wrap it up there. Thanks so much for starting your morning with us. Have a wonderful Friday and an even better weekend. For any questions, comments, or feedback, send an email to morningbrew@morningbrew.com. Let's roll the credits. Emily Milliron is our executive producer. Raymond Liu is our producer. Our associate producers are Olivia Graham and Olivia Lake. Garrett Peck is on audio. Hair and makeup wears Prada. Devin Emery is our president, and our show is a production of Morning Brew.
Great show today, Neal. I wish you all well.